My losses aren't taken into consideration for my tax, bro. Like any other company, okay, cool. If you lost this amount of money as a result of something like outside of your control, then that would be deemed an expense to your business, right? But then with crypto, let's say you bought Bitcoin, it was at 88,000 a week ago, right? You bought at 88,000. Now let's say you hypothetically got taxed on the 6th of Feb. You'd be taxed on that 88, the rate that you purchased on, not the 58,000 Rand it's currently valued at. Hi everyone, welcome to Quick Trader. I'm David. I am sitting here with
Rashid
and
Luca.
And today we'll be talking about all the different taxable events in crypto.
Yeah, I like how you.
Yeah, they must know. Keep it on the
down low.
Yeah, there's a couple of taxable events that we're going to chat about that I'm very unhappy about, but we'll get to that.
Get into it, yeah.
So today we're going to be covering
crypto to crypto swaps.
Crypto to crypto swaps. That's a taxable event for those of you who didn't know. Obviously, we've spoken about selling crypto for fiat on a peer-to-peer system. Obviously, if you've sold your cryptocurrency and those funds have gone into your bank account, that's a taxable event. But a couple of the others, like earning rewards. Yeah.
Spending crypto as well, and we'll also be talking about gifting crypto. Those are all taxable.
I find that crazy that when you're spending crypto, like let's say you make a purchase with crypto, that you're gonna get taxed for that. What do they like VAT you? Yeah. By taxable, they probably mean there's no value added tax to that good, right? So
now
you need to pay tax at the end of your financial year. Your VAT on crypto assets because you're not.
But how do they determine it in like the sense of you gifting someone crypto? Like
Gifting is one of those things I completely disagree with.
So you're giving someone a gift and now you're gonna tax me on it.
Yeah, because dude, like in a so let's say we're doing a normal sale or a normal gifting, you give a family member or a friend a not cryptocurrency, fiat, right? You send them some rands to their bank account. If you reference a gift, that's non-taxable for the person receiving that money and for the person paying. But then when it comes to crypto,
now it is.
Now gifting becomes something that's taxable.
But now, so why? You know?
Well, look, I kind of get why. Just because I'm unhappy about it doesn't mean I don't like see the
reason
behind it. And that's because you could like launder with ease. You could just
keep sending gifting.
Gift all the time. My issue with it is why don't they just put a limit on the same way they do with fiat, right? You're restricted to 100,000 Rand in gifting per year, right? So I can gift 100,000 Rand and that's non-taxable. And the person receiving that can't be deemed, if they've received under 100,000 Rand, it can't be deemed like an income, right? So they can't be taxed on it. But then when it comes to crypto, if I were to gift you crypto, they would
tax it. Exactly.
They would just
unless you were my spouse.
Unless I was your
spouse. So if we were married,
we can make that.
Yeah, we can make it happen.
We can make it happen. I like that. After pod.
There we go.
So there's some advice for you guys. You want to gift some crypto, just go and marry your friend.
I thought you were giving us marital advice. Okay, so let's run through. We've gone through the gifting process, right?
Yeah.
So that is actually a taxable event. But I think once crypto becomes like legal tender in South Africa, then it wouldn't be. Maybe gifting like Ethereum would be a taxable event, but I don't think gifting Bitcoin, if it's legal tender, because then you're sending rands to someone, reference gift. So it wouldn't. Our law would literally contradict its own laws regarding currencies. So, yeah. Am I thoughts right? But we are gonna have to wait to see
what happens with the state.
Yeah. Because we saw that this only came into effect now. It's only coming into effect March.
1st of March 2026.
Yeah, 100%.
That's around the corner. So
yes.
We're gonna see pretty soon.
I think that they'll put stringent laws on, right? Probably. To correct everyone's behavior, and then it will be more freeing regarding what. I think they're trying to see what people are going to declare.
Yeah.
Right?
They want to know more about the transactions.
Yeah.
And what is exactly going on.
Or SARS definitely wants to see how much money they could make through what people are declaring, and then
Yeah,
I think posting
100%.
out what. And these aren't all the taxable event guys. We just a couple we're running through. If these are posted, then I'm bang. I'm scared. Yeah, because this is a lot, man. Crypto swaps. I don't think so. With regards to swapping crypto, like let's say your client wants to purchase Bitcoin from you, but you had just sold all your Bitcoin or swapped all your Bitcoin for USDT because the market crashed, right? So you didn't want to be holding Bitcoin because it was risky. Now your client messages you, hey bro, I'd like to buy 5 grand's worth of Bitcoin, and you just
Swapped it.
You just swapped out and ran out, right? I think that's messed up. That they're charging you to go swap to Bitcoin again.
But because now they will charge you to swap to USDT.
Yeah, the only reason the only reason I'm swapping is to service my client, and now I have to be taxed again, essentially.
Anything to make money.
Anything to make
money. They just want money, bro.
Who would have thought our government needs more?
Crazy. So you're gonna get taxed. Then when you swap it to USDT, then when you swap it back, then when you sell it again, you're getting taxed again.
I mean, I guess our saving grace is that they're only taxing us on the market price value at that time, and it would be the gain in the swap. So generally with swaps, there isn't much of a gain. It's like a 0.0 something like percentage gain with a swap, or loss the other way. I just find it upsetting that my losses aren't taken into consideration for my tax, bro. Like any other company, okay, cool. If you lost this amount of money as a result of something like outside of your control, then that would be deemed an expense to your business, right? It would decrease like your taxable income or taxable, or what you need to declare to be taxable, right? But then with crypto, you bought Bitcoin, let's say you bought Bitcoin, it was at 88,000 a week ago, right? You bought at 88,000. Now let's say you hypothetically got taxed on the 6th of Feb. You'd be taxed on that 88, the rate that you purchased on, not the 58,000 Rand it's currently valued at. So like if you go and
at 50, I think it's at
71.
No, I'm using the example of if you were to have to declare your taxes on the 6th, right?
You wouldn't be able to say now you've lost X amount, for example. So you can't get taxed on that 58, you're getting taxed on that 88.
Not only have you lost money, you now have to fork out even more money for taxes on profits that don't exist. Like the government's going to charge you have to pay tax based on market price value. So I'm paying tax on $88,000 worth of Bitcoin, and then I need to declare, and the value in my portfolio, the rate is at 58,000. SARS is making you pay tax based on the 88 because that's how you receive the product. Whereas like with assets in the normal working environment, what do we do to decrease those values?
Sorry?
Like if you're using let's say I buy this table because
of a business expense.
It would be so if this table loses value, right, I would pay less tax
on
so I find that completely messed up, man. I don't know how it's going to change, but I'm thinking informing people and letting people know what taxable events are. I think informing people will actually help with the pushback against some of these laws. Some of them make sense. I mean, we must be taxed. There are gains and we're making an income. We should be taxed.
But I feel like we should be taxed accordingly, though.
Yeah, within reason. I think like charging us we swapped something. There was no gain. We swapped. Most of the time, we're swapping in order to like sell what we just swapped. And then we're getting taxed on what we just sold and what we just...
It's too much. It's too much.
Even it costs us to swap as well. It's not like swapping is free. I mean, it's not not expensive, but it's of what it can be. But it's not like that's free. So I just feel like, out of my pocket.
Dude, another thing I found out, we were talking about, let's say you sign up on my affiliate link with Quick Trader, right?
One mate.
Then what do you get what do I get if you're trading?
Don't you get commission of my trades?
Yes. So that's like a reward affiliate program we got running.
Lovely.
Bro, SARS wants us to declare what all of those rewards are too. So even those are in like a separate wallet, we have to declare, even though it didn't enter our bank account, we didn't spend it, taxable.
That's crazy.
taxable.
Crazy.
Yeah, it's super crazy,
So
man.
then
But
how do they charge now percentage on the percentage you making off of, for example, Ease Trade?
how the affiliate?
Yeah. No,
So,
no.
How SARS would work
Yeah.
it out? I guess they would add it to your annual income.
Oh, okay, I see.
Yeah, your annual taxable income. Even though it's technically a reward, so you're gifted that by the platform, SARS won't see it that way. Think of it this way, no? It's like at the end of the year, your company gifts you, like usually companies gift appliances, not money. So like your company gifts you like a toaster.
Yeah.
And then SARS is like, the market price value of that toaster. That's what's happening, and it's unfair, but yeah.
Even through, because I mean, earning rewards, like if you are mining and that is also taxable.
Yeah, mining and staking.
Airdrops. Staking and airdrops, yeah.
And airdrops, those are all taxable.
Yep.
Yeah, I didn't know about airdrops. I knew about the mining and staking were taxable. So like you borrow your crypto as like leverage for the platform to use.
I see.
So like staking is like, let's say you are trading on TD Markets, and TD Markets actually offers this function. You can borrow your crypto to the platform for them to give out loans and stuff, right? And you get a return on that. I think every coin has a different staking reward. There will be certain coins like XMR and Solana that sometimes have staking rewards over 10%. So you're getting over 10% return on any of your funds that get utilized by the platform. Yeah. And well, the moment you start staking, your crypto that you selected are utilized.
I see.
Yeah. And then you get taxed on that as well. Even if so this is what I found crazy, because I chat GPT'd it just to be certain. Let's say you buy Solana, right? You buy 10 grand's worth of Solana, right? And you've been staking it for like the last 3 months. Okay, you've gotten some returns on those.
Yeah.
If Solana crashes, like it did now on the 5th, what's taxable, you don't get to draw that drop as an expense. But now your staking reward still increases your taxable income.
That is crazy.
Yeah, it's messed up. It's completely messed up. That's taxable events, guys. So just to summarize what we went through, it was
crypto to crypto swaps. It was selling, so P2P, selling for fiat, earning rewards, gifting crypto, and also spending crypto like expenses. Some sort.
Well, the last one, I think that makes sense because we were not paying VAT on any of the goods or sales we're doing. So charging VAT or charging us VAT actually does make sense.
The one that does make sense.
The one.
Awesome, guys, we came to the end of the video now. We're speaking just a little bit about taxable events in crypto. If you think any of them are fair or which ones you think are unfair, let us know down in the comment section below. Don't forget to smash the like, subscribe, and we'll catch you in the next one.